The average American is now paying $225 a month for car insurance. That's $2,700 a year, just to drive your own car. And here's what makes it even worse. Most people have absolutely no idea why it keeps going up. They just open the bill, see a higher number, and think, okay, I guess that's just how it is now. It's not. And by the end of this video, you'll know exactly why your rate went up and exactly how to bring it back down. Let's get into it. Welcome back to Money Made Simple, where we break down US money topics in plain English. No jargon, no fluff, just what actually matters. Hit subscribe if you're new. Let's go. Look, nobody enjoys paying for car insurance. You pay every single month. You never use it. And then out of nowhere, your renewal letter arrives and the number is higher. Again, for the third year in a row. Here's the thing that should make you angry. Between 2021 and 2026, car insurance premiums rose by over 36% across the United States. 36%? That's not inflation. That's not bad luck. That's the insurance industry passing their costs straight on to you, whether you deserve it or not. And the wildest part? A lot of the reasons your rate went up have absolutely nothing to do with you or your driving. Today I'm going to show you exactly what's happening and exactly what to do about it. So why is car insurance so expensive right now? There are 4 main reasons, and once you understand them, the whole system starts to make sense. Reason 1: repair costs exploded. Modern cars are packed with technology. Cameras, sensors, computerized everything. What used to be a simple fender bender that cost $800 to fix now costs $3,000 because that bumper has 3 sensors and a backup camera built into it. Insurance companies are paying out more for every single claim. And guess who they pass that cost to? You. Reason 2: used car prices went crazy. After the pandemic, the price of used cars went through the roof, which means when your car gets totaled, the insurance company has to pay way more to replace it than they used to. Again, that cost gets passed straight to your premium. Reason 3: more accidents, more fraud. Distracted driving is at an all-time high. More accidents mean more claims. More claims mean higher costs. And in some states, insurance fraud has become a serious problem, adding hundreds of dollars to every honest driver's bill. Reason 4: your zip code. This one surprises people. Your rate isn't just based on your driving. It's based on everyone around you. If you live in a high-traffic city, a neighborhood with lots of theft, or a state with expensive medical costs, you pay more, even if you've never had a single accident. Now here's where it gets interesting. Because while the insurance industry wants you to think these rate increases are completely out of your control, they're not. There are specific moves you can make right now that can cut your bill by 30, 40, even 50%. And most people never try a single one of them. Let me show you exactly what they are. Alright, here's what you actually came here for. 7 proven ways to lower your car insurance bill. Let's go through them fast. Number 1: shop around. Every single year. This is the single most powerful thing you can do. Most people pick an insurance company once and never leave. That is a massive mistake. Insurance companies give their best rates to new customers, not loyal ones. Studies show that people who shop around every year save an average of $400 to $700 annually. That's it. Just get quotes from 3 or 4 companies and pick the cheapest one that covers you properly. Number 2: raise your deductible. Your deductible is the amount you pay out of pocket before insurance kicks in. If you currently have a $500 deductible, raising it to $1,000 or $1,500 can drop your monthly premium by 15 to 30% instantly. Just make sure you actually have that money saved in case you need it. Number 3: bundle your policies. If you have renter's insurance, homeowner's insurance, or life insurance, combine them all with the same company. Most insurers give you a 10 to 25% discount just for bundling. That's hundreds of dollars for a 5-minute phone call. Number 4: ask about discounts you don't know exist. Most people have no idea how many discounts insurance companies offer and never advertise. Good driver discount, low mileage discount, good student discount, military discount, work from home discount, paid in full discount. Call your insurance company and literally ask, what discounts am I not currently getting? You will be surprised by the answer. Number 5, drop coverage you don't need. If your car is more than 8 to 10 years old and worth less than $4,000, you probably don't need comprehensive and collision coverage. Here's the math. If your car is worth $3,000, your insurance company will never pay more than $3,000 if it's totaled. But you might be paying $400 a year for that coverage. Drop it. Put that money in savings instead. Number 6, improve your credit score. Yes, in most U.S. states, your credit score affects your car insurance rate. Insurance companies use something called a credit-based insurance score. Drivers with poor credit pay on average 50 to 100% more than drivers with excellent credit for the exact same coverage. If your credit score is below 600 and 670, working on that number will eventually lower your insurance bill too. Number 7, use a telematics app. Most major insurance companies now offer apps that track your driving. If you're a safe driver, not speeding, not braking hard, not driving late at night, you can earn discounts of 10 to 40% on your premium. Companies like Progressive's, Snapshot, State Farm's Drive Safe and Save, and Allstate's DriveWise all offer this. If you're a good driver, this is free money. Now I've saved the most important tip for last, because this one move alone has saved people over $1,000 a year, and almost nobody does it. Are you ready? Here it is. Call your insurance company and tell them you're thinking about leaving. That's it. Just those words. Here's why this works. Insurance companies spend hundreds of dollars acquiring each new customer. Keeping you is cheaper than replacing you. So when you call and say, hey, I've been a loyal customer for 3 years, but I just got a quote from another company that's $200 cheaper, watch what happens. A lot of the time they will find a way to match it. Or come close, because losing you costs them more than giving you a discount. You don't even have to be aggressive about it. Just be calm, be honest, and let them know you're looking around. That phone call takes 10 minutes. And it could save you over $1,000 this year alone. Quick recap. Car insurance is expensive because repair costs exploded, used car prices rose, accidents increased, and your zip code works against you. But you're not helpless. Shop around every year. Raise your deductible. Bundle your policies. Ask for hidden discounts. Drop coverage on old cars. Improve your credit. Use a telematics app. And call your insurance company and threaten to leave. Do even 3 of these things and you will pay less. Guaranteed. Now I want to hear from you in the comments. Has your car insurance gone up recently? How much? Drop your number below. I read every single one. And if this video helped you, hit that subscribe button so you never miss another money breakdown like this. Check out the video on screen for more ways to keep more of your money. See you in the next one.